Okay, so you've seen the charts, right? It's a total sea of red out there. But the big question is this a time to panic, or is there a real opportunity hiding in all this chaos? That's what we're going to dig into today. We're breaking down a new report that cuts right through the noise. Let's just dive in.
So, where are we getting our info? Well, our guide for this whole thing is this awesome, super concise report from the folks over at Canada Blockchain. And let me tell you, they've really done the legwork here, boiling down a crazy complex market into some really clear, actionable stuff.
So this really brings us to the heart of it, right? The report says the market is in extreme fear. Now, for a lot of people, that's the signal to just run for the hills. But what if it's the exact opposite? What if this is the moment you should be looking closer? Let's see what the data has to say.
All right, first things first. To really get a handle on all this fear, we've got to zoom out. Let's look at the big picture for a second. What's really driving the market under the hood? The OCP report points to one thing in particular that's super important. And that indicator is something called global liquidity, or M2. Now, what is that? Basically, just think of it as all the cash and easy-to-get money just sloshing around the global economy. And why does that matter? Well, the more money sloshing around, the more of it is looking for a place to go. And that can be a really, really good thing for assets like crypto.
Okay, and here's where it gets really interesting. This is the first big disconnect we're seeing, because according to this report, global liquidity is actually going up every month. So while everyone's freaking out day to day, the big money picture is quietly getting better. This kind of hints at a more bullish or positive trend for the medium term.
So okay, the big picture? Surprisingly good. But now let's zoom right back in. What's the mood on the street, like right now? How are investors actually feeling? For that, we turn to a classic, the Fear and Greed Index.
If you're not familiar, this index is basically a thermometer for the market's feelings. It goes from 0, that's extreme fear, all the way up to 100, which is extreme greed. It's simple, right? When people are scared, they sell. When they're greedy, they buy. This thing just puts a number on that whole emotional roller coaster.
So what's the number today? According to the report, it's a 16. Yeah, a very, very low 16. We are deep, deep in the red zone here.
A score of 16? That officially puts us in a state of extreme fear. I mean, this is the kind of number you see when things feel like they're falling apart, During those big sell-offs when everyone's convinced the sky is falling.
But, and this is a huge but, here's the key insight from the report. This level of fear is, and I'm quoting here, often a good entry point. It's that classic saying, right? Be greedy when others are fearful. The report is basically suggesting that this much panic could be a huge signal that we're getting close to a bottom.
Okay, so let's recap. We've got a super fearful market in the short term, but a pretty bullish outlook for the midterm. So, how on earth do you navigate that? It's a real puzzle. The next part of the report dives right into that classic investor's dilemma, risk versus reward.
All right, let's talk risk. The report points out a big one, especially if you're providing liquidity. It's called impermanent loss. Let me try to put it simply. Imagine you put two different coins into a pool. If one of those coins goes to the moon and the other one just sits there, you could actually end up with less money than if you had just held onto them separately. It's kind of weird, but it's the main risk you've got to watch out for.
Now, on the flip side of that risk, you've got the reward, and that's the APR, the annual percentage rate. This is the good stuff. It's the return you get from fees every time somebody uses your pool. So, the higher the APR, the more you're getting paid to take on that risk of impermanent loss we just talked about. And this really lays out the choice you have to make. It's a balancing act. Do you go for a pool with low impermanent loss, play it a bit safer, even if the returns are lower? Or do you go after that juicy high APR, knowing that you're taking on more risk? That's the decision, right there. Okay, so let's get down to brass tacks. This is the really actionable part of the report. Knowing all this, knowing about the trade-off, what specific pools are looking good right now? The report actually calls out 3 specific ones that stand out. Think of it like a menu. First up, you've got SOL/USDC. They flag this one for having low impermanent loss, so it's kind of your more conservative play. Then, if you're chasing those bigger returns, there's WETH/SOL, which has a high APR. And finally, if you want something in the middle, a more stable option, they suggest CBTT/USDC. So, something for everyone depending on your style. And hey, just to add one more thing to the mix, the report throws in a 24-hour prediction. They're saying, expect things to be volatile, but with a bias to the upside. So basically, buckle up for a bumpy ride in the next day or so, but the overall direction could be looking up. And that's pretty much the whole picture.
You've got a market that's absolutely gripped by fear, but at the same time, it's being propped up by more and more money flowing in. And you've got this constant balancing act between playing it safe and chasing returns. So it really all comes down to this one question. And it's not just for today, it's for any day in this market. How do you decide to walk that knife's edge between risk and opportunity?